This is Colin Cattell with Palisade Radio. This week we're bringing on a new guest to the program, none other than James Turk. James is the founder of the popular online precious metals dealer goldmoney.com and co-author of the book The Money Bubble, What to Do Before It Pops. James is also regularly a guest on Russia Today and several other financial shows, and is a well-known commentator on the financial markets. James, thanks for coming on the show.
Thanks, Colin. Great to be with you.
You know, physical ownership of one's assets is a major theme throughout your work. All of us in the gold community know that the Federal Reserve's policy of printing money will likely have dire consequences. Certainly gold and many other hard assets have risen dramatically in the past 15 years. Aside from gold and silver, however, where are you seeing asset prices rising substantially? I've heard you mention art and London real estate in the past.
Yeah, exactly. There's so much money being printed by central banks around the world, not just the Federal Reserve, but other central banks as well. It has to end up somewhere. And a lot of this money is going into what are perceived as safe havens. So, for example, real estate in London, real estate in Singapore, they're perceived to be safe havens. So, prices have basically been rising and rising. Collectibles of all sorts, not only paintings and things like that, but antique automobiles. There are only so many old Ferraris out there. Central banks are not creating more old Ferraris. So, people who collect cars and, just people who are looking for safe havens are going into things like that. And it's what you see in the early stages of what the Austrian economists call a crack-up boom. The demand for the currency declines, and people move into things out of the currency. And what's happening here, Colin, is I think the super rich get it. They're moving out of currencies because they're not earning enough interest income in their bank account to offset the risk and going into things. Safe havens of all sorts are benefiting.
It's almost as if rich people don't care if they overpay for assets because having something tangible is better than holding paper money. I just heard that in New York City, the rents on apartments are above 50% of annual income, which is at almost bubble level as far as I'm concerned. Can you touch on how assets like gold and real estate can actually become extremely overvalued in a situation where people lose faith in the government and the fiat currency?
Yeah, if people lose faith in the government and the fiat currency, the currency is overvalued, and tangible assets really won't be overvalued in that environment. You get a rush out of paper money and a rush into things of all sorts. I think we're probably seeing that in terms of the super rich who basically are exiting, money out of bank accounts and paying exorbitant amounts of money for paintings and things of that nature. I would just like to see some of that money moving more frequently and more rapidly into gold and silver.
What do you think is holding back the price of gold and silver at this time? We've been in a downturn for over 2.5 years now. What do you see as being the catalyst for that turning around?
Yeah, my own guess is that there's a lot of shorting of the precious metals, principally in China. There's a lot of financing deals that are being done where the borrower is actually taking a lot of risk. In other words, they're borrowing precious metals, selling that precious metals, and not hedging the price risk in order to get a lower interest rate. So it's like what happened back in the early 1990s up through, maybe up to the early part of early 2000s, where the mining companies were borrowing physical metal and selling it to the market and depressing the gold price. You're seeing a similar amount of that happening now in China, and I think that's been a big factor. The difference is that I think you're basically going to see a turnaround in that, so that the precious metals prices, the pressure that we're seeing on gold, should be ending.
Do you expect a rubber band style effect where the price of gold will shoot up dramatically in a very short time period, or do you expect a slow rise over the next few years?
My guess would be is it's going to come back quickly, simply for the reason that there's been so much downside pressure and gold has been so undervalued at current prices. So it could very well be a short squeeze. If it is a short squeeze, then you're going to have a rubber band effect.
Your book is titled The Money Bubble, What to Do Before It Pops, and without giving away the entire book, what type of balance do you recommend to people to preserve one's assets or grow them as the money bubble gets closer?
Yeah. Well, what the money bubble basically is people have generally lost sight as to what money is. You know, the paper that's circulating as currency, you know, the various national currencies, that's not really a money in the sense that it doesn't settle an obligation. You know, only tangible assets will pay for tangible assets. If I go to a shop and use some gold or silver coins to purchase a good or silver, the shopkeeper has no lingering obligation. He has no lingering risk. You know, he now receives a tangible asset in exchange for the good or service that he's giving up. But if you accept any national currency, you have payment risk, you have inflation risk, you have bank risks. And it's these types of risks that people are losing sight of. People are accepting those risks without realizing how severe those risks are. The risks of holding money in a bank today are quite large. The risks of inflation are quite large. The risks of various promises being broken by governments is also quite large. And I think that's what we're going to see as we move forward from here. That's will be the popping of the money bubble, where people will understand that, yeah, gold's been money for 5,000 years, and it remains money. And it's the recognition that it remains money will be the popping of the bubble.
Can you paint a picture for the average, say, U.S. citizen as to the consequences or results of overcranking the printing press? What could life be like if people do not take these steps to protect themselves?
Yeah, you know, if something happens to the dollar, and you know, my first book was The Coming Collapse of the Dollar, you know, own gold instead of paper money, and that came out in 2004. You know, it's not just the U.S. Citizens that are going to be affected. It's going to be everybody's affected because the dollar is the world's reserve currency. It's the currency on which everything else in the world is basically based. So my expectation is that what you're going to see is, you know, like 2008, what happened with the collapse of Lehman Brothers. A lot of promises are going to be broken. And it's not going to be just in the banking system, but I think it's the government, the U.S. government's own promises, because they've promised so much they can never possibly meet all of those promises. So, if, you know, the key is to not be reliant on the promises of others, to, you know, as much as possible, have your wealth tied up in real assets of all different sorts rather than the promises of others.
If the money bubble pops, or when the money bubble pops, and people demand a new currency system, do you see gold filling that hole, or will the Chinese and Russian consortium currency become the new reserve currency? Or do you see an emergence of private currencies? Do you have any way of knowing what might occur?
Well, you can't predict the future. You can only look at what's available and try to draw some logical conclusions. My hope is that private currencies become dominant. And you know what we're seeing today in terms of various cryptocurrencies, you know, the bitcoins of this world and things of that nature, represent an important technological breakthrough. So I think they have a role to play. But at the end of the day, I see gold really emerging as the form of money, which it's always been. It's always been the center of commerce, the center of global commerce, and it's only in the last, you know, couple of decades when, you know, people have sort of lost sight of the importance of gold. And that's what allowed the money bubble to actually grow and expand to the extent that it has. But here's the key point: the attributes that made gold as money, you know, throughout the last 5,000 years, those attributes haven't been destroyed. They haven't been lost. They've only been ignored or forgotten. And as problems with national currencies grow, people will look for alternatives and are going to see gold and silver as a substitute for gold. Those attributes are still there. And in an environment where people are going to be avoiding risk, gold and silver are going to do very well, in my view.
You just mentioned Bitcoin. A lot of gold bugs are anti-Bitcoin, and there's almost a fight going on between Bitcoin and gold, whereas I think they should be on the same team. It sounds like you're positive about Bitcoin, though. What's your outlook on Bitcoin?
Yeah, I'd like to talk more about cryptocurrencies in general rather than Bitcoin, which is just one type of cryptocurrency. But the general rule, in my view, is that cryptocurrencies bring a new technology to the table. And this technology significantly lowers the cost of global payments. And what this basically means to me is that cryptocurrencies and gold will go hand in hand. You know, gold will be the form of money in which you hold most of your liquidity, but you use some cryptocurrency to make a payment. And whether that cryptocurrency is a Bitcoin or some kind of gold currency or whatever, ultimately gold still has a role to play. The loser in a cryptocurrency environment is the banking system, which is why the banks are giving such a hard time to the technological innovators who are trying to move into the cryptocurrency area. They see it as a competitive threat, and they as a consequence, are going to make it difficult for the technology and the innovators in that technology.
For people wanting to buy gold and hold precious metals, what are the best ways that you suggest to do that? Maybe there's some balance that people should hold at home, but outside of that, should they be storing it in vaults overseas or buying shares of a publicly traded ETF?
Yeah, before you buy gold, you have to ask yourself, why are you buying it? Are you buying it because you want to profit from fluctuations in the price, to be a trader, or are you buying it because it's a safe haven? If you're looking to profit from fluctuations in the price and you're a trader, that's one thing. But if you're looking for a safe haven, that's something completely different. My recommendation is forget about trading gold, be an accumulator of gold. And so I'm consequently talking about be an accumulator of physical gold, because physical gold has no counterparty risk. It's a tangible asset. Its value is not based on any individual or any country or any central bank. It's based on the market perception. The gold has value because it's been money for thousands of years. And if you are buying physical gold, there are only two ways to do that. You buy it and you store it yourself, or you buy it and you have someone store it for you. And what it really comes down to, Colin, is everybody's personal choice. You have to figure out what the advantages and disadvantages are to you. If you buy it and store it at home, you have it at hand, but the disadvantages, it might be stolen. If you want to turn it back into some national currency, you have costs involved, inconvenience, and things like that. If you use professional storage, you don't have it at hand, but you do have liquidity. And so it's a question of really what suits everybody's individual purpose. My own recommendation is to have a little bit at home, but a lot of it just stored professionally for you in different parts of the world, so that you get global diversification. You get geographic diversification. You get diversification into different political systems and different political risks.
On the point of diversification, do you have any of your money or interest in the mining stocks rather than gold itself?
Well, I'm really just a bullion guy, because what I basically look at is gold is money, stocks are an investment. They're two different things. In a portfolio, you have cash and you have investments. Gold is your cash component. You compare whether you want to own gold or dollars or Swiss francs or British pounds or any of the other currencies. And clearly, gold has been the best performer over the past 12, 13, 14 years, since the beginning of the new millennium. When you're looking at investments, you have some different criteria that you have to use to evaluate and judge. You have to look at the quality of the management team. You have to look at the balance sheet. You have to look at the quality of the mine. You don't have those issues when you're dealing with gold. So, gold is money. Stocks of mining companies or any other stocks, they're an investment. They're two different things.
On that note, where can people go to find out more about your services?
Goldmoney.com. We're available 24/7, and we are presently storing about $1.5 billion of physical precious metals for 23,000 customers located in over 100 different countries around the world.
Wow, that's amazing. And what countries are your vaults in?
Canada, United Kingdom, Switzerland, Hong Kong, and Singapore.
Great. There you have it. Thanks so much for coming on the show, James.
Thanks, Colin. It's great to be with you.